Welcome to Global Tax Talk. I'm Will Morris, and I'm delighted to be joined today by Peter Michalowski, who is our new Global Indirect Tax Leader, or in PwC speak, ITX. Peter, welcome.
Thanks, Will. Great to be here. It's been a whirlwind few months operating in this fast-changing landscape.
Right. So let's talk about that. So there is a lot going on in the indirect tax world.
Yes.
VAT, GST, customs, excise duties, all of that are in your remit. But they can make up more than half of a government's revenue. I mean, considerably more than half of a government's revenue. And the landscape continues to evolve so quickly. So now the introduction of new digital services rules. So tell us a little bit about how indirect taxes are capturing more revenue worldwide.
Sure, Will, happy to. So consumption taxes, which are mainly VAT, value-added tax, sales taxes, and excise duties, account for around 30% of total tax revenues in OECD countries and have been a stable source of tax revenue for a long time. OECD countries are increasingly reliant on the VAT as a primary source of revenue as excise duties have declined over time. And VAT is by far and away the biggest source of revenue in most OECD countries. In some countries, as you alluded to, it's up to a third, almost a half of the revenue. We see that in places like Ireland and New Zealand. And you mentioned the digital economy, right? The digital economy has been a challenge, but many territories have effectively adapted their VAT systems to capture revenue from digital transactions. So there's really defined rules around taxing like digital marketplaces, and they're using rules based on sourcing of customer location. And over 100 countries have rules to tax digital services, and we expect 30 more countries to come out with rules in the very near future in this area. Overall, VAT it's a very efficient way for countries to collect tax revenue. And for businesses, it's really embedded now in their processes. So it's something they're used to. But with that said, things are changing quickly.
Right.
We'll get to that shortly.
Yeah, we will do.
And just a couple other comments, just around customs, duties, and tariffs. They're obviously incredibly relevant in international trade. And these rules have really specific criteria and procedures that exporters and importers need to be aware of. This landscape could potentially change dramatically.
Right.
And finally, the last area I want to touch on is just the advent of green taxes or environmental taxes. We're seeing that kind of come as the next flavor of indirect taxes, and we expect that trend to continue into the future.
Yeah, I mean, I always tell people that, obviously I'm a direct tax guy, but one has to be humble in the face of indirect tax experts, because so many of these new things are actually embedded much more in the indirect tax world, although a crossover as well. So, those hard and fast lines between direct and indirect and customs and tariffs, for that matter, are clearly blurring. Anyway, but that sort of leads me on to the next question, which is that the reporting requirements around all of this are obviously changing rapidly as well, and with more real-time reporting and mandatory e-invoicing and that type of stuff. Governments have access to much larger amounts of data. So how are businesses keeping pace with that?
Yeah, this is a fascinating and very fast-moving area that really requires a convergence between the business and the tax departments, and as well as with the taxing authorities, right? So in this increasingly digital world, regulators are moving to real-time reporting, right? Because it gets them transparency into granular transactional data in real time, which is incredibly valuable for them from an enforcement perspective. And one of the big areas in this has been VAT in the digital age, VITA, and we expect that to pass as a package on November 5th. And if it does, it's going to mark a significant moment for digital reporting. Right. Some of the things that VITA will require, it's going to require that digital reporting obligations will arise for all intra-EU transactions starting in July of 2030. And e-invoicing is going to be the key pillar that underpins VITA. So as a result of this, many countries are looking to modernize their VAT system by moving to digital reporting. We're seeing it all over the place. For example, Romania just introduced domestic B2B invoicing rules, and we expect Belgium and Germany to follow suit very, very soon. A couple other things, this has really put a premium on companies to adapt their systems and processes to comply with these digital reporting rules. And it's a burden in the short term. In the long run, there could be some benefits. E-invoicing could generate commercial benefits like faster payment of invoices. Also, can improve the accuracy of VAT filings. And I think we expect in the future, governments are almost going to produce the VAT return. Right. It's going to be incumbent on companies and providers to really do a reconciliation, right, to assess the accuracy of that. Some of the key issues that businesses really need to think of as they're trying to navigate these rules in the digital reporting space is they need to have processes to keep up just with the pace of change and the legislation that's being enacted around the world. They need to understand the various country rules and develop roadmaps for complying with those. And most companies are going to need a partner, right. Whether it's an advisor or whether it's a third-party software company to help them navigate and comply with these rules. So, for us, we're really talking to clients around some key things to consider as they move forward on how to deal with that. Is you need to really start driving out that roadmap to change and adapt your processes, right. Including your technology. Data quality and data extraction are paramount importance. And finally, you need to include the relevant stakeholders in your business to make sure you get the necessary budgets and resources to comply with these rules, because these rules will impact how companies do business and right. will affect operating models going forward. So that's a lot happening in that area.
So that's great. So let's drill down on that a little bit, because as you're saying, lots of technology requirements and multinationals, sort of evaluating their indirect tax processes. Are they fit for purpose? What technology do they need? So what significant hurdles are there? And, do you have a success story you can share with us about how businesses are actually coping with, this onslaught of new requirements?
Yeah. So obviously, leveraging technology is a vital enabler for companies to comply with these fast-changing, complex indirect reporting requirements that we're seeing all over the world. And we're seeing businesses leverage various forms of technology. And AI is coming fast, right? And it's going to impact this area. And as companies look to automate and centralize processes. But at the same time, we're seeing the revenue authorities do the same thing, right? They're increasingly digitizing and leveraging technologies as they administer taxes. So, historically, multinationals with a global footprint have kind of leveraged an indirect tax function resident in multiple territories around the world. Controllership model it's often referred to. We're now starting to see the trend where companies are looking to move to a more centralized, automated process that leverages technology to deal with this. Because from a cost reason, but also just the volume of data has become overwhelming. And it's not just indirect taxes; they're trying to manage Pillar 2. It's just the whole environment has become so challenging. And as we know, tax departments are trying to do more with less people, less budgets. So technology is incumbent. I mentioned AI. This is going to play a really important role going forward for both businesses and for tax authorities. So I think we're going to see companies use technology and AI to really drill down into their data to be able to get more visibility and analytics and insights to help guide decisions going forward, as well as to kind of get ahead of trends. So from a success story, we at PwC, we have a proprietary global indirect tax compliance tool called Indirect Edge. Recently, we just helped a large global manufacturer kind of move to a more centralized, automated model by implementing our ITX Edge platform, which allowed them to kind of automate return compilation, calculations, and review of data across millions of transactions. And what that also gave them was the ability for better visibility into their data, like dashboards, analytics, reconciliations, which they found incredibly valuable and really allowed them to move some of their resources towards more value added, working more closely with the business as opposed to just trying to get numbers on forms. So that's a trend we're going to continue to see. I think companies are going to look for partners to help them navigate this fast-moving landscape that has real implications on their business and their operating models.
Well, Peter, thank you so much. This has been great, and I suspect we will need to get you back very soon to talk more about this. Hopefully not too much about tariffs, but about all of this area. So again, thanks so much for joining me.
No, it's a pleasure and happy to come back anytime.
Great. And thank you for joining us, and come back again next time so that you stay global tax ready.